Hey guys, what's up? It's me, Jonathan, and welcome back to Money Talks, where we want to offer you financial information and meet you where you are financially so that you're able to stick to your budget, manage to pay off your debt, and begin to save on your path to building wealth. Today, guys, I want to talk about the fee that will be implemented in about the next 30 days. If this is your first time joining me here on the channel, go ahead and hit that subscribe button and you'll be notified every time I upload a new video. And if you like this content, please go ahead and hit that thumbs up, that like button, and it really helps me out. So guys, I want to talk a little bit about what is going to be upcoming that you should be aware of over the next 30 days. So I know over the past few months, if you watched a few of my videos, especially the ones where I talk about real estate and refinancing, you know this is a big and great time for you to take advantage of the opportunity to refinance, especially if you have a VA loan, if you have that opportunity, because the rates are extremely low. It's a great time for you to really save money and put yourself in a solid financial position on your biggest asset, your home. But there are things, again, you should know in your purchase process, refinance process, besides just closing costs, that will not alter your decision, but you should know about the fees and things that happen along the way. One thing in particular that I want to talk about today is the Fannie Mae Freddie Mac fee. And this fee was added not for a good purpose. It was more added because, again, they just kind of thought about it. Has no really rhyme or reason, but the fee will be taking place and it's expected to take effect on December 1st. It was put off a few months ago when it first came out because things were unclear about how it would be charged, how things would be rolled in, that those type of questions happen. But then the pricing was adjusted around September, and so the rates that you're seeing now, regardless of how low it is compared to what you have, already have the fee added in. If you actually close your loan before December 1st, you won't actually be charged this actual fee. And it's about 50 basis points, 50 basis points. And it's usually added to your closing. It's separate from your rate. It's 50 basis points is about 0.5%. But the point I want you to understand is these are the things that are listed and can be added to your closing. How will this affect you? Well, if you have about a $300,000 loan, you're going to be paying about $900. Yes, again, it's already added in your pricing. And yes, this is not something that you will have to necessarily come out of pocket. But it's important that you understand what are things you're actually paying for at this time. See, there's a great deal of refinances going on right now. It's a great deal of purchases. And it's a great opportunity, regardless if you're at a 3.7, 4.8, what have you, and you're able to drop down to a 2%, 2.5, 2.6, something of that nature. My goal is just so that you understand that, hey, these costs are included in the loan. Know what you're getting yourself into. It's not something that can be easily avoided. What are things you could do? You could potentially ask your lender for credit. You could, and you could look at how the loan is structured and see if there's any way that you can potentially offset that cost. But the fact of the matter is there's not really a way to avoid it, only because it's Fannie Mae and Freddie Mac. Fannie Mae and Freddie Mac are the entities that back the loans. They insure the loans for many banks and they buy the loans. So when they charge this fee, it's not something your institution has a control over. But if you have a loan that particularly you didn't have any points to pay for your actual rate, you likely have a credit. And that opens the conversation to your institution that not just that you want a credit for that particular fee, but you want to look at ways you can offset the closing costs. Remember, the goal here in refinancing a home or purchasing a home is always you want to make money on the buy. So when you're doing the transaction, that's when you make money. The least you can spend, not coming out of pocket, meaning they rolled the cost into the loan or they added money to the loan, the least that you're actually spending. Maybe they charged you for these items, but you got a credit. Well, you didn't actually spend that money. But, or maybe they just took those fees or removed those fees altogether. Your costs were just very low. Those are ways that you can actually make money on the buy. Well, how do you start to make sense of this particular arena? Well, I want you to understand that in your purchase, in your refinance, you have about 5 different, maybe 6 closing costs. The 6th is kind of an iffy, but your 5 closing costs is you typically have to pay for origination, or processing. Basically, you're paying the institution to do the loan. So if you have a Bank of America, if you have a Wells, if you have a credit union, whatever, you're paying them something to do the loan. So even if they don't use the word origination, or even if they don't use a processing fee or something of that nature, you can ask them simply, how much am I paying you to actually do this loan? The second cost you want to make yourself aware of is an appraisal, if an appraisal is needed. Now, remember, during this time, the appraisals, if it's on your primary house, the home you stay in, a lot of those have been waived. But it's important that you understand that that is a piece of your closing. The appraisal cost. Number 3, you have title insurance. Now, title insurance, yes, that does protect the lender, but it also includes recording your name on the deed, removing the previous person's name, putting that lien on the title, closing those documents. There's a cost associated to those. And yes, title is the one piece out of your closing costs that you can actually shop in your neighborhood and see if you can find a lower cost for that and use that as an option in this transaction. Again, another way to save money, to help you save money on the buy. Number 4 and 5 are taxes and insurance. If you don't escrow your taxes and insurance, these typically won't be a part of your closing costs unless taxes are actually due. But your taxes and insurance are a part of your closing costs. And then number 6, this can be, again, if you choose to go this route, would be points. If you're paying any points to buy down the rate. Again, rates are very competitive right now, and there are many different offerings. So when you think about buying points, the next question you should have is, how long do I think I will be at the home? And based off the break even based off the amount of money you spend for those points versus the time you're going to have the home, that's the best way to evaluate whether or not it's going to be a good value for you. Because it's not about you breaking even. It's about, will I get value from this interest rate that I'm paying for after I basically pay in full, it breaks even. These are things you want to think about along with that Fannie Mae Freddie Mac fee, because the more you can get comfortable and get understanding about these costs, again, this won't be the only time you'll refinance or purchase. You move and you upgrade and things of that nature, but the process by which you purchase will be the same. There may be things as it goes on, but those are the core items. I hope you guys enjoyed this video. If you like it, go ahead and give it a thumbs up. If you haven't already, please subscribe to the channel, and I can't wait to see you guys in the next video.